Hello. Welcome back to the final class of the Max Options Trading Beginner course. You guys are definitely going to want some pen and paper for this one, an empty notebook, whether you're on your phone, laptop, PC, or tablet. No push ups today. You guys have done enough. You are disciplined traders at this point. So now we're done. Congratulations, everybody. If you went through the whole course, you know the introduction. You understand candlesticks and support and resistance, the first and most important basics of technical analysis. You got the Greeks and implied volatility, and now you know a standard way of choosing the right contracts. You had a fantastic weekend, and now you really smashed technical analysis. You learned my own personal day trading and swing trading strategies that have kept me in the game as a professional trader. You have discipline, risk management, and your own trading plans and logs. You learned a little bit about advanced strategies and selling premiums to make passive income. And now I'm going to show you guys how to wrap it all up, how to pay yourself, reinvest, and let's throw a little bit of tax information out there. Remember, I didn't write any of this shit, nor am I a tax professional. I just like breaking it down for you guys because it definitely is. It's something important, you know. All this stuff's so important, and you shouldn't pay for it. It should be free. Everyone should want to eat together, sit in first class together. Thank you. For those that are a little bit early, find a nice quiet place for your distractions. Please be respectful at all times. Stay on mute. If you guys have any questions at all during this class, please write them down and we'll get to them at the end of the session. Stay focused, stay on task, and some foul languages may be used during this class, but it is an adult setting, so put your fucking headphones in. Before we begin, follow us on Facebook. Not really. I don't really care. But Max Options Trade on Twitter. I got to tell you, I put some good shit out there. I even put some of the plays that I'm entering live right on my Twitter. When you're taking this course at any time, tag us on the big account at Max Options Trading, and we will tag you right back. Give you the love and the clout you deserve. Thank you guys so much for taking the course. Follow me on Max Options Trading with 2 G's. I'm funny. I'm funny yourself. If you don't think I'm funny, fuck you. I am funny, you know. Reddit, sometimes we post articles that we can get in there and have some good solid advanced discussions on. So, and our YouTube channel, thank you guys so much. Please like and subscribe and leave us a review if you enjoyed this course. Thank you guys so much for joining us on our social media platforms. Before we begin, let me get a sip of bubble water. Ooh, did you hear that? That was nice. Let's talk about payment plans, taxes, and reinvesting. So here's my payment plan. Here's how I pay myself. The first number you need to know is your realistic one. What's your daily goal times 5 trading days? Mine is $200 a day. All right, $200 a day keeps the day jobs away. That's just under $50,000 a year. I'm good with that. I can live comfortable on that. Out of the 1,000 a week, I will pay myself in 2 different ways. All right. So when I hit that goal, I pay myself in 2 different ways. If my trading account is all cash, I'll most likely take $900 of the $1,000 off the table and pay myself. If my trading account has open plays, I'll either take half of my profits or I'll take half of every green trade only. So maybe I had some bad trades, I had some good green ones, and I'll just take a smaller portion. If I have no risk swing trading, I pay myself $900 because $900 is my passive number. What is your passive number, guys? Think about this. What number do you need to pay all your bills and survive comfortably? So $3,600 a month for me is all my bills plus $500 miscellaneous plus $500 savings. So if I hit rock bottom, I know at $3,600 a month, I could find my way back to success. All right. This is how you should be set up. This is how you should be living your life, thinking like this. If I'm swing trading, I won't take too much equity off the table because you may need to react accordingly to the market. A significant average down, you may need to, see extreme buying opportunities. And it doesn't matter if you have a red week or a green week, you still need to pay yourself on a red week. Just pay yourself on a smaller scale using the second method. Because why are you doing this? All right. Set a schedule for your payments regardless of win or lose. So since I have a weekly payment schedule, regardless of a green or red week, I am paying myself in one of those 2 ways. You got to remember why you're doing this. And you're doing it for the money. If you're trading and you're not doing it for a mainstream or a second stream of income, then what the fuck are you doing it for? Please tell me in the comments. I gotta know. Comment below. Let me know what you're doing this for if it's not money. Honestly, I'm very interested. No hate, all love. Just want to know why. Regardless if it's short term or long term, if you're not doing it for the cash, what are you doing it for? Some items to consider if you think of trading as a business is determine how much you need to pay yourself. I just showed you guys mine. I suggest doing it off your passive number. Understand tax and compliance implications. We're going to go over some of those. I'm not a tax professional. And pay yourself the right way. Don't pay yourself lump sums. Don't do little challenges. Just stay consistent, stay solid, and do it over a long period of time to build true wealth. Why must you pay yourself? Well, by paying yourself first, you're basically socking away some cash for yourself, whether that's into a savings or retirement account. Make sure you set aside a portion of your income to save. All right. Thinking of personal savings as the first bill you must pay yourself, that could really help you build tremendous wealth over time. So I say savings and retirement account, but I'm going to be honest with you. I don't believe in savings or retirement accounts. I've listened to Grant Cardone for way too long, and I truly believe that I'm going to build my own wealth and my own streams of passive income to overtake savings and retirement funds. So my life, if I take all my money and I manage it myself and I build my own passive income number high enough, that is my retirement. That's my children's retirement. That's my family's legacy now, right? So I'm a little bit different than most. I don't believe in savings and retirements. I believe in passive income. That's fuck cash. Cash is worthless. Passive income is king. Pay yourself first. This is a personal finance strategy of increased and consistent savings and investments while also promoting frugility. All right. The goal is to make sure that enough income is first saved or invested before your monthly expenses or your discretionary purchases. Stop making stupid fucking purchases. Data from the Federal Reserve shows that most Americans do not have enough money saved either for retirement or near-term emergencies. And I think the number is astronomical, like over 70% of America, guys. Think about this, okay? Think about this. I'm going to put this in the calculator. Let's just say there's 350 million Americans. That's 245 million people that cannot afford retirement or short-term emergency. Okay. Don't be these people. The first thing I would suggest for you to do is debt. Take care of that debt. Debt consolidation is key. Pay off that debt aggressively. Stop eating out. Stop doing all the dumb shit. You don't need that fucking pair of shoes. Pay off that debt. All right. Once you pay off that debt, get your emergency fund, your EF ready. Your emergency fund should be your passive number times 6 months of living. If all shit hits the fan. So Max I have $25,000 sitting in a bank account somewhere. I even have 2 of them, honestly, because you never know what's going to happen. You never know what's going to take a turn in your life, and you're going to need a supply of backing. 70% of people don't have even step 1 done. They're in debt. All right. Keep that in mind, guys. So I went on 2018 when I was $20,000 of debt, got out of the Army. I had nothing. I didn't have a car. I didn't have a job. I had credit card debt. I had it all. After about 2 years of aggressive investments, a good hard working job, stopped doing all the bullshit and started reading, I'm worth over $1 million today. All right. If I could do it, trust me, anybody could fucking do it. It's important to build a basic understanding of how tax laws prior to trading. We're going to go over options are taxed in the United States. So closely, we're going to look at options that are traded over on their own and not exercised. We're also going to discuss the wash sale rule. But before going any further, please note yet again that I'm not a tax professional. I didn't write 90% of this course. And I'm just a high school dropout who's wildly successful and passionate. And I'm also the most motivational motherfucker you're ever going to meet. This should serve only as an introduction to the tax treatment of options. Consult with your tax professional or hire an accountant. I have an accountant. She is literally the best. Literally takes care of me. When you sell a capital asset for more than you paid for it, the result is a capital gain. Capital assets include stocks, bonds, precious metals, jewelry, and real estate. The tax you'll pay on this capital gains depend on how long you held the asset before selling it. Capital gains are classified either as long-term or short-term. All right, those are the 2 different capital gains, long and short. It's important to keep these taxes in mind whenever you sell an asset, especially if you've been dabbing in day trading online. First off, any profits you make are taxable. And second, you may have heard that capital gains are taxed more favorably than other types of income. But that's not always the case, guys. As mentioned above, it depends on how long you own these assets before you sold them. Long-term capital gains are derived from assets that are held for more than 1 year. They're disposed of 365 days. They go up to 20%. Short-term capital gains are taxed like your regular income. That's up to 37%. And according to the new laws by the Biden administration, we might be going up to significantly higher, 43%. And if you're in Democratic states, even higher, guys. Check your state and federal laws. Got to know this shit. So here is the 2021 from Google that I pulled up, the tax rate for long-term rates. So single, if you make up to 40,000, 0% rate, and that's over 365 days, 1 year. I fall into this rate right here. I'm not the big dog yet, but that's the rate right there. So take a look how you guys file your taxes, whether you're a single, head of house, the married joint, married separate. This is your tax bracket for long-term investing. So any investment you secured long-term capital gains on, aka you held it for longer than a year, this is the bracket you'll fall in. Short-term rates, these are capital gains that are taxed through ordinary income. So any income you receive from your investments that are held for less than a year, aka every fucking day trade, almost every swing trade, every premium sold, these are bang, capital gains short-term. But if you made $80,000 that year from your salary and then $10,000 from selling premiums or getting money in the market, your total taxable income is now $90,000. So this is the bracket that I pulled up for 2021 for short-term gains. So this is pretty fascinating. So let's take a look at this. So I'm single, I'm not married or anything. And then I actually made the 35% bracket last year, but because of deductions and such, I believe I paid the 22% rate. Hire a good accountant who will know more. Another common myth with taxes is, oh, I made $518,000, so I have to pay 37% on the entire 518. That is incorrect. You pay by these brackets. So you'll pay 12% on 98.75. You'll pay 22% up to 41.25. Then you'll pay the extra 2% up to 85.525, and so on and so forth. It's not a full 37% on 518.4. It's just 2% more on 207.350. And that's how it goes. They go by the actual brackets. So a lot of people don't understand how taxes are taken from you. That's how it works. So the higher bracket you go in, it's a good thing. You know what that means? It means you made a shitload of fucking money. Congratulations. Keep investing. Keep doing what you're doing. You're on the right path. People think, I don't want to pay taxes. Shit, I want to pay the most taxes. Because you know why? It's just another way that I let my silence speak my successes. Patience is a long-term investment that pays off. All right. So if you just look here, you can see that you buy 100 shares of this, buy 100 shares of that. Oh my God, look at that check mark. Let me fix that. That's all right. Don't hold that one against me. I'll do push-ups later. You sold them for $3,000 profit, but look at this. Capital gains of $3,000, but you held this one for a year and you didn't hold this one. You're up to $25.50 instead of $22.80. Now I know what you're thinking. Oh, that's bullshit. I don't want to hold it for a year for an extra, couple $100. But guess what? You're looking at it wrong. That's not a couple $100 extra bucks. Okay, that's 10%. That's well over 10%. That's 20-something% of your initial investment right here. And then this one is just over 10% of your initial investment. So what if this was 20,000? Okay, that 2250. That 25,500 is going to look a lot better than 22,080, right? So think about it. In long-term patience, it'll pay nicely. Losing trades. All right, so everyone's a loser. If no one's posting their losing trades or telling you that they lost trades, then you have, my friend, a fucking liar. There's only two types of traders in this world. Ones that lose consistently and just earn a little bit more, and then you have fucking liars. Losses on options transactions can be tax deductions, not credits. Credits are the good ones you want for your tax time, but deductions are also nice. Individual investors and traders pay taxes on capital gains, but if you experience a capital loss, you should be able to deduct or write that off up to the amount of the capital gains you earned this year. So if a taxpayer's capital losses are more than their capital gains, they can deduct the difference as loss on their tax return. However, unfortunately, that capital loss is only $3,000 per year, or $1,500 if you're married and filing as a separate. So you can only deduct up to $3,000 of those losses, but a $3,000 deduction is substantial. That's nice. It definitely is going to pull your deduction down heavily, which is good. Both long and short options for the purpose of pure options positions receive similar tax treatments. So gains and losses are calculated when the positions are closed or when they expire on exercise. In case of a call or put, rights, all options that expire unexercised are considered short-term gains. Ask your tax professional about short-term gains, but this is how exercise and unexercised contracts work. So Booty purchases an October 2020 put option on company XYZ with a $50 strike in May 20 for $3. If they subsequently sell back the option when the company drops to 40 and he makes those short-term capital gains, or in this case, Booty would be taxed on a $700 short-term capital gain return because he made money less than 365 days. Does that make sense? That's it. If Booty writes a call option for company XYZ in May, receiving a premium of $4 with an October 2020 expiry, and decides to buy back their option in August when it jumps to 70 on a nice earnings report, then he's eligible for a short-term capital loss because the company inversed his play and now he's taking an L on that play. But if he takes a win on that play and he holds it for further in the year, he'll get a long-term capital loss if it was still a loser on the unexercised option. This is because he would have owned the option for more than 1 year's time, making it a long-term loss. So sometimes these longer plays, they're going to save you money in the end of the day. Covered calls are a little bit different. They're slightly more complex. So let's just say you own 100 shares of any underlying asset. You sell one insurance policy, one contract as premium. You get to keep that premium. But if the call goes unexercised, you'll realize a long-term capital gain if you hold it for more than a year. If it goes unexercised and it's less than a year, short-term capital gain. If the call is exercised and you have to sell those shares, or you're the one purchasing shares, you're going to realize a capital gain on your total position because you're going to get the difference in the share price from your strike price, and you're going to get the short-term capital gain on that premium. So remember that anytime you sell a premium, that's automatically a short-term capital gain. Let's talk about the wash sale rule. One moment. Let me grab a little bit of water. According to the IRS, losses of one security cannot be carried over towards the purchase of another substantially identical security within a 30-day time span. The wash sale rule applies to call options as well. So, for example, if Booty took a loss on a stock and buys the call option of that very same stock within 30 days, they will not be able to claim that loss anymore. Instead, Booty's loss will be added to the premium of his next play. And the holding period of that call will start from the date he sold his shares. So if Booty were able to take a loss on an option and buy a similar option of the same stock, the loss from the first option is disallowed. And the loss would be added to the premium of the second option. That's the wash sale rule. So when you take a loser, you roll out your option, roll out your play to a further expiration date on the same underlying, you've officially hit the wash sale rule. And that's it. Let's talk about reinvesting. All right. Reinvesting, it's the practice of using dividends. Ooh, I love that word. Interest or any other form of income distribution earned in an investment to repurchase additional investments like shares rather than receiving cash. You should, I wrote you could, but you should reinvest in dividend stocks, fundamental stocks, growth stocks, and real estate. Okay, that's what I invest in. That's the test of time right there. There's a couple things in life that are just going to go up: real estate, dividend stocks, fundamentals, growth. As long as your company continues to thrive and your portfolio is balanced, reinvesting dividends, you could do this automatically in most brokerages. It's called the DRIP program. This is the dividend reinvestment program. So what it does is it just takes that dividend and automatically buys fractional shares, or the amount of shares that dividend's cash value is worth, automatically for you. And so every time you get a dividend, that dividend buys more asset, the asset grows, and you continue the snowball effect. If a company is struggling, though, and your portfolio is a little bit unbalanced, you may want to consider not reinvesting dividends, take the cash and putting that cash somewhere else. that would make more sense, like fundamental or growth stocks, to try and get a better ROI in the long run. But very safe companies are dividend stocks. You have your stocks like AT&T, Verizon, a lot of banks like Bank of America, GS, Goldman Sachs, another good one's Wells Fargo. So a lot of companies with good, strong dividends. Microsoft, Apple have little small ones. They're good stocks. They're blue chip. They're not going anywhere. And this is why dividend investing is kind of a safer practice. And in the long term, you can grow some and accumulate some nice wealth off dividends. And paying yourself is a crucial part of trading. This is the conclusion. This is it. That's it right there. Everything I just laid down for you guys, that's it. Paying yourself is a crucial part of trading psychology. All right. You must remember why you are trading. And a payment plan keeps you on track regardless of win or losses. A lot of people lose sight of the fucking goal. What's the goal? For me, I want to be what's called stupid rich. It's important for me to continue my journey out for financial success. I am retired already. I'm 31 years old. I've been retired for a year and some change. I don't have to work ever again. Think about that. And my risk and management, my discipline that I got from being a law enforcement officer and being in the military, and it's truly helped me. The knowledge that I brought myself by reading books of just books on books on books of successful people and their mindsets. And I suggest you guys do the same. All right. Don't lose sight of the picture. You have to know what the financial taxes of this profession of being a trader, and you have to know how to pay your taxes, because don't be that guy. Don't be like Wesley now. Don't be like Wesley Snipes now. All right. Hey, you guys listen. I worked in prison. 2 years is a long fucking time. I highly suggest you just get a good tax accountant to look over your shit every quarter, or if you're not doing too well, every year. It doesn't matter, but get you a nice tax professional. Don't be afraid to pick up the phone and just get a consultation. Reinvesting is key to long-term financial freedom. Everyone wants to be financially free, but nobody wants to put the time to get there. It's a marathon, not a race. Warren Buffett once said, nobody wants to get rich like him because it's slow. But guess what? That man makes over $100 million a year just from an Apple dividend. That's insane. His company only goes up 1% to 2% a year compared to everything else, but his 1% to 2% is billions and billions of dollars. All right. You got to keep that Warren Buffett state of mind, but you got to get that Grant Cardone, that Jordan Belfort hunger. You got to be out there selling. When you're out there selling, you're out there grinding, you're out there making money. I promise you, in the long run, you're going to be one happy person. Life is going to be good to you. Thank you so much for attending the Max Options Trading Beginner course. Did you enjoy the Max Options Trading Beginner course? That's it. All 10 classes. You did it. Thank you guys so much. If you did enjoy it, please go to Trustpilot, Google, or Facebook. Leave a review. It would absolutely mean the world for me, and a simple appreciation for taking the time to just do this for everyone, letting it out there. It's 100% free. Thank you guys so much. At this time, if you would just leave a comment, a like, a subscribe on YouTube or any of our social media platforms. The engagement is what we thrive on, and we can keep this going. We'd love to have you guys in the Discord as well. We have so many great products and things coming out. I hope you guys enjoyed the course. Please, please, please review anything you need, and you could reach out at any time. Take care.